Hey everyone, welcome back to Corporate Decoder. Today, Cayson Acquisition Corp just filed an 8K, and I am seeing a clear sign they are extending their runway. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is basically buying itself more time to find a business to merge with, and they are getting help from their insiders to do it. Let's dive into this filing from Cayson Acquisition Corp, or CAPNU as it is known by its ticker symbol. The report is dated the 26th of August 2026, but it refers back to an event on the 18th of March 2026, which was the date of a special meeting. This is a type of document that companies file to let us know about major events that happen suddenly. This filing is about Cayson Acquisition Corp. They are a company that is essentially a shell looking to acquire or merge with another business. These types of companies are often called SPACs, which stands for Special Purpose Acquisition Companies. They raise money through an initial public offering, and then they have a set amount of time to find a target company to merge with. If they don't find one, the money is usually returned to the investors. Now, let's look at what Cayson Acquisition Corp has registered with the stock market. They have units which are made up of ordinary shares and something called rights. They also have ordinary shares by themselves in these rights, which basically give the holder the chance to get a tenth of an ordinary share if the company completes its initial business combination. Think of it like a bonus ticket for shareholders. Cayson Acquisition Corp has checked the box to be considered an emerging growth company. This means they can take advantage of certain regulatory benefits, like having a bit more flexibility with reporting their financial information. For us watching, it means they might have less stringent disclosure requirements compared to larger, more established companies. The main point of this filing is about an extension. Cayson Acquisition Corp had a deadline to complete a business combination, which is basically finding another company to merge with. They held a meeting back in March of 2026 to get approval to extend this deadline. The company can now extend this deadline on a monthly basis for up to 12 months, meaning they have until March 2027 to find a deal. Here is the crucial part: to get these extensions, the company's insiders, which include their sponsors, officers, and directors, have to lend the company money. Specifically, they have to lend $125,000 for each month the extension is used. This money goes into a trust account and helps increase the amount shareholders get back if the company liquidates or gets redeemed. This filing confirms that on the 26th of August 2026, these insiders put in the money for the 6th month of this extension. This is essentially buying more time with their own money. Now, if you are tired of sifting through dense financial reports yourself, check out Decoded.report. It offers distilled insights on companies like this one, including risk assessments and red flag scans directly from filings, all updated in real time. The link to find it is waiting for you in the description and pinned comment. Okay, back to what this actually means for shareholders. The company is also including a standard disclaimer here, stating that this report is not intended to be a complete picture of everything, and it should not be the sole basis for any investment decisions. This is common for these types of filings to manage expectations and legal liabilities. You will also see forward-looking statements mentioned. These are essentially educated guesses or projections about the future. The company is saying that actual results could be very different from what they are expecting, and investors should not solely rely on these predictions. It is a way for them to communicate potential future outcomes without making a legally binding promise. Let's quickly look at the securities that are registered with the Act. This includes their units, their ordinary shares, and those rights we talked about earlier. All of these are registered on the Nasdaq Stock Market LLC, which is a major stock exchange. This means their securities are publicly traded and subject to the rules and regulations of Nasdaq. Finally, the report is signed by Yohei Kao, the Chief Executive Officer of Cayson Acquisition Corp. On the 26th of August 2026. This signature signifies that the company officially acknowledges the information presented in this filing. Looking at this filing, it is pretty straightforward. Cayson Acquisition Corp is a SPAC that is running out of time to find a merger partner. Their insiders are stepping up and lending money to buy them more time, which is a common tactic for SPACs in this situation. This extension to March 2027 gives them more runway, but it also means more money has to be put in by the insiders if they continue to use these monthly extensions. The key risk here, as with most SPACs, is whether they can actually find and close a deal before their extended deadline. If not, shareholders could face a situation where their investment is redeemed, and the company essentially winds down. The fact that insiders are willing to lend money suggests they believe a deal is still possible, but it is a significant financial commitment for them as well. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.